Okay, hello everybody. Welcome to Korean Atlanta Mentorship here with another Velocity Banking video. And I've been looking up how much is a Mercedes. Look at this. I put this in all caps so Google knows that I'm serious. And Google told me that's about approximately $34,000. And I was thinking, $34,000, not bad. So what I did is I pretended I'm going to get myself into debt for this new $34,000 Mercedes and be at a negative savings at cash flow for about $254.67. So that's what we're going to do today. So you see this auto loan here for 34,000. I got myself a new Mercedes. Actually, I drive a 2025 Toyota Corolla. But next car, I might get a new Mercedes and be a little bit in the red, but that's okay because we got Velocity Banking to help us manage our cash flow, right? And if you don't know who I am some dude on the internet who paid off a mortgage in 2 years and 9 months. In fact, I did it in 2024. So I'm kind of bored and sick of saying it, but I'm also flexing when I say I'm bored and sick of saying it because it's like rich people problems, you know what I'm saying? Like, oh, I just paid off a mortgage in 2 years and 9 months, and I'm sick of saying it because it's been more than a year since I've said that, right? So, yes, that is me. Paid off a mortgage in 2 years and 9 months, and mm-hmm. So let's go ahead and get started talking about debt payoff. So, what is Velocity Banking? It's just a debt payoff strategy where you're going to throw all of your money into debt and use a line of credit to help you pay off your debt. Okay. So we have the average American style budget here, which is your income, expenses, and then you put your leftover and savings. And then if you do an expense breakdown, we're going to list every single debt that we have. So we have 10 credit cards here, just bought a brand new Mercedes, right? And then we have a mortgage. And then on top of that, we got our personal expenses that are not tied to debt, food, gas, insurance that we always have to pay for. And look at this, because we got that car. We're negative $254.67. Ooh, oh no, what do we do? Because if we did not have that car loan, we'd be positive $363. Interesting. All right, so question, right? So this is how I always show or present Velocity Banking for anybody who's a newbie. I just say, hey, listen, man, if you're making good income, you have all this debt. Let's say you just bought a new Mercedes, and you're negative $254 in the hole. Do you need to make more money to kind of get out of the hole? And everybody will say yes, and then you'll say, oh, really? And then you'll wink at them, right? Do you see me winking at you? Actually, I'm not winking. I'm just pretending. But let's go ahead and show them how to quote Velocity Bank, which is not even a real, not even a real verb. That's the tricky part. Okay, so now we need to get through the first mental hurdle of what we call average American banking, which is that we're not going to save money. Okay, I know this is crazy, right? So a lot of times people freak out when you tell them that you don't save money. Bankers freak out when you tell them you don't save money. My parents freak out when I tell them I don't save money, right? Because why don't we save money? Because our new savings account is our line of credit, and we just need to pull money from a line of credit when we need it. And our line of credit is essentially going to be our main operating account now. So the way that the average American treats the checking account is like it's the final destination of the money, right? But when we do velocity banking, the checking account is just the middleman, right? It's nothing special. I'm not putting my money there. So if I have 19,000, and look how casually I say the word 19,000. If I have money coming into the checking account, I want to make it zero as quickly as possible because then it's going to go to debt. Okay. So that's the mindset, that the first hurdle, societal conditioning that we need to get rid of. And let's turn this negative cash flow into positive cash flow by moving some debt into a line of credit. So if you don't know what a line of credit is, it's basically a financial tool where you could borrow money, pay it back, and then use it over and over again, right? So, example, my $373,500 home equity line of credit. Home equity line of credit. So basically, what this means is that I can go to the bank's website, click a button, kind of like this one right here. This is one of the banks, one of the 20 banks credit unions that I use. I think it's 20. I don't know. I need to check, but I click a button, right? And then it just dumps money into the checking account, no questions asked, at an interest rate of usually 8 to 15%, right? Usually. And so, yeah, we're going to use our line of credit as our main operating account. And also, I have many other lines of credit, which includes credit cards, right? So, credit cards are a type of line of credit. It's because you can swipe, pay it back, and use it over and over again. And if you take a look at all the lines of credit that I have, oh my goodness, and we sum it up, $739,000. $739,000. So I can, at least in this stage of my life, just go ahead and swipe and pay for a new Mercedes or wire it or whatever, or pay for a debit card. Actually, I did pay for my Toyota Corolla 2025 with the debit card. Yeah, I remember that. Okay. So, anyways, how do you get all these lines of credit, right? How do you get all these lines of credit? And I tell people the secret, but people don't, they reject it. Okay. The secret is banks don't lend money to people who need it. Yeah. Yeah. So, how do I get all these lines of credit? I just went to a bank when I didn't need money. And I was able to do this just with like 2 to 3 years. I mean, if you take a look at this channel like 2 to 3 years ago, I was like bragging about how I got over $200,000 in lines of credit, and then now it's over 739,000. Okay, I'm not hiding anything from you. That's what I'm trying to tell you. And y'all act like sometimes, well, not y'all, everybody. I'm not saying everybody. I'm just saying sometimes people act like I'm hiding stuff. How do you get a line of credit? And I was like, I just told you a secret. I just told you a secret. They don't lend money. Banks don't lend money to people who need it. And just to give you a crash course on why they don't do that is because people who say they need money don't pay you back. And the bank has a ton of transaction and statistics to back that up, kind of like an insurance company, right? Why do you think they have all these credit bureaus and stuff and the bank is actually paying to access that data? Because it's very valuable to know if you need money or not and if you pay your bills. And people who need money don't pay. Okay? Remember that once upon a time your friends were like asking like, "Hey man, I really need this money. I really need it." And if you use the bank's language translator, that just means, "Hey man, I want to borrow money, but I don't want to pay you back." So you just give the bank what they want. A low risk borrower, which is just go to a bank when you don't need money. Yeah, I know it's easier said than done, but I'm just saying that's how I got $739,000 in lines of credit. Now, in this example, we're going to assume that we have a $260,000 8% line of credit. Now, why would we assume this? Even though we clearly need money at this time, it just makes the demonstration easier, right? It's kind of like saying, "Hey, I crashed my car without car insurance. What if the car insurance I'm sorry. What if the car insurance company gave me a car insurance policy after I crashed my car without car insurance?" Yeah, that would be pretty awesome, wouldn't it? But probably not going to happen. Okay. And if you want to see a real life scenario where, people have a ton of debt and, not much left over with a maxed out line of credit, that's probably more realistic because you got the line of credit before you need it, but you just treat it like another credit card. I have that in a paid live stream, 22 debts, right? So I think I've gone over that twice, and I got over another scenario that's similar to that, but not as many debts. I think it's like 14 debts. So I put that behind a paywall, right? 99 cents only. Okay. So please, please help me out. 99 cents. Thank you. Thank you very much. Or in Konglish, Korean English, we say thank you very kamsa. Thank you very kamsa, I think. All right. Okay. So we're going to assume we have a free and clear line of credit. Okay. And what we're going to do is just move some debt into the line of credit to increase our cash flow. So we have this number called the cash flow index. It's just a basic formula of the balance divided by the payment. And then here we see that we have these numbers, they're kind of a ranking, and then yeah, yada yada yada. So basically what you do is you take the low ranking numbers and then move them into the line of credit. So 20s and 30s is fine, 50 and 200 we're going to leave alone for now. So what does this 200 mean? It basically means that I have to give someone a lot of money for very little cash flow. I have to give someone $270,000 to get $1,100 of cash flow back in my life, which is not what you want. You'd rather, I mean, it's much better to pay this $35,000 to get $1,100 of cash flow back in your life than $270,000. Okay. So what we're going to do is just move some of this debt into the line of credit 5, 8, 15, 27, 30, 7, 10, 35, 12, 15. And then we're going to go ahead and sum it up, right? And that's $164,000 of credit card debt. Okay, $164,000 of credit card debt. And look at this. Look at this. This is the most craziest thing. You see how we didn't make more money? You see it when you asked all your friends, like, hey, do you need to make more money? Okay. Well, these just payments just go away. Okay. And somehow we went from negative $254 to $4,856.16 without making more money. I know, crazy, right? So we splurged a little with our little new Mercedes 34,000. Okay, base A-class sedan, whatever that means. I'm not a car guy, so I don't know what that means. But 34,000, we splurged. We went to negative $254 that month, and yet somehow when we didn't save money, when we used a line of credit, we went to $4,856.60 of cash flow. Whoa, no way, right? Isn't that from Bill and Ted? Okay, so as you can see right here, now the final step is you put your entire paycheck, the entire $8,000 into that line of credit, right, as an overpayment, and then you take your expenses out, and then you rinse and repeat over and over again. And after every single month, the balance of the line of credit should go down by $4,856.16. Okay, so I'm going to go ahead and do that. And then G2 plus H2 minus whatever our cash flow number is. So 4856.16. All right. Now I'm going to go ahead and do this. Multiply it by the interest rate, 0.08, divide by 12. And then I'm just going to copy and paste. And look at that. That is so simple and easy. And we see that in 39 months, we paid off all the credit card debt. 39 months, a little bit more than 3 years, but it's not bad that in 39 months, we paid off $164K of credit card debt, yet we started off at negative $254 in savings. Ouch. All right. And then now it's time to focus on paying off that Mercedes, right? 34 grand, that A-class 34 grand Mercedes. Look at this, 37 grand in Carvana. Okay. 2025, whoa, 40 grand. Interesting. You know what I heard in terms of branding, like the low cost Mercedes usually had the really big logo, whereas like the higher end ones, they make the logo really tiny. And I forgot what the actual explanation for that was, but I just thought that was interesting. I think that's how it works. So let me go back here. 34 grand. Oh, whoopsie, my alarm went off again. Sorry about that. I'm back now. So what was I talking about? Spending 34 grand on a Mercedes and see how much it's been paid off. So yeah, let me go here. So we're at month 39, and then we're gonna do this right here. So 39. We got this cool loan calculator that tells us what the current balance of the loan is. And if you didn't know, this is actually like a representation of what they call a TVM calculator, time value of money. So if you just type in like TVM calculator, and you kind of use one of these right here, you could kind of calculate this as well. I find it easier just to use Excel to represent this, just much easier to kind of see where we're at. And so we see that the current balance is about 12 grand. So what we're going to do is move that 12 grand into the line of credit, move that 12 grand right here. And then this is going to be plus 12581.34. And then what we're going to do is increase our cash flow by $600. Okay. And then now we have $5,000 of cash flow, right? $5,000 of cash flow. And then let's go ahead and update this right here. So this is going to be minus 5474.68. And then look at that. So it just took about 2 months, right? I don't think we haven't really paid off faster. Well, kind of, but not really. I mean, it took about 2 months, so 41 months we paid it off, and then let me do this right here. 41 months, 164 plus 34, and then 198K. That's it. Paid off the Mercedes. Now, what do we do? Let me actually go back to the previous search query of how much is the Mercedes? What kind of Mercedes do you want? You know, I feel so comfortable knowing that I paid it off in about 1 month, right? I mean, a lot of people freak out. And you know what's funny is that car loans don't even actually make that much money compared to a mortgage. Like you look at that 30-year mortgage at 3%, and that's a 50% total interest that you're paying, right? But then I don't know if you ever heard the saying like car dealerships don't sell cars, they sell car loans. So because the profit margin on just selling a car is so thin, they push you to get the loan, right? They push you to get the loan. So that's what I heard. I don't know. I don't work in a car dealership, but I might buy a Mercedes. Actually, you know, I've been watching a lot of car mechanic YouTube shorts, and they always talk about how BMW is like the worst in terms of auto repair. But I have a friend with like 6 BMWs, or his family has like 1 BMW per family member, and so it's like, uh, I would like a BMW. I just don't want to have to deal with the car maintenance hassle. But maybe Mercedes is less, or I'll get a Lexus because Lexus is a Toyota, right? So who knows? All right. So now what do we do here? Do we get an investment property? Do we pay out the mortgage? Let's get an investment property. I'll go ahead and do that. Right. So most important rule of getting investment property or rental property is that you need to buy it at a discount. So you should take a look at this right here. $300,000 a loan. I'm sorry, not loan, value for $200,000. So you need to get it at a discount, right? And how do you get it at a discount? You need to find some sort of a distressed seller, distressed house, right? Something that needs repairs, something that has been neglected, and then you're there to kind of save the day, right? And then so once you've done that, right? Then what you do is you get a tenant. So I had this tenant right here who's going to pay me a 14 grand check in 2024, right? So you could do that, or you could turn it to an Airbnb. You know, get 3 to 5 grand a month on Airbnb. Although it might depend on your area, because I'll be honest. Before I set up my Airbnb, I watched like many videos about the Airbnb crash and hosts, and how hosts are freaking out and want to sell their properties, right? But I just still set it up anyways because I figured, hey, if I make no money, at least I have a nice place to stay in my 2-acre farm, right? And so this is what we're going to do. We're going to assume that we now have an investment mortgage. And you know what? Because I'm lazy, I will just buy. I don't want to get another loan, right? I'll just buy it with the line of credit that I have, $200,000 all in. So what I do is I just put plus $200,000, okay? And then what we do is we add the tenant's income to our personal income, right? Because maybe the area rent is about $2,000 a month, so plus 2,000, and then we don't get all of that, right? So we have to pay some expenses. So we just assume that, you know, ballpark figure, 70% of it is the net operating income, so 30% of it goes to expenses. And so now we have a cash flow figure about 6,874. All right, let's go ahead and do it and see what's up. Okay, so let's go ahead and update the cash flow. And then now this will be minus 6874.68. Okay, and let's see how long it takes for us to pay off that rental house that we bought at a discount. Ooh, 74 months. Okay. So 74 months and okay, so now what are we gonna do? Let's go ahead and we don't have to go all crazy and buy 10 properties. Let's just have one investment property and then pay off our mortgage. So why don't we do that? So in 74 months, what's the current balance of the mortgage? About $232,000. And there's two ways that we can pay it. We could just dump all of our extra cash directly into the loan or use a line of credit. Either one works, right? So there's nothing wrong with just directly dumping into the line of credit. I'm sorry, into the loan. It's just that in terms of cash flow management, a little bit harder, but you could do either way. All right, so let me just show you here that how I'm going to do this. So this is going to be 232. Actually, let me do this. So I am going to put our income in, which is 10,0013, right? That's our income. And then 0.01. Let's be a little bit accurate. 0.01 to the penny, right? And then I'm going to do, let's say, $10,500 chunk. And then let's put in the current balance of that loan, which is 232,388.52. So 232,388.52. And then you see it, bam, 2.5 years. All right. So now how do we know what the total payoff for all of our debt is? It's easy. Just go to 0 here, 74 months plus 2.5 years. So 74 months, so 74 plus divided by 12 plus 2.5, 8.67 years with 2 free and clear houses. Okay, that's right, 2 free and clear houses in less than 9 years. So you ever hear like those velocity banking people say, "Come to my presentation and I'll show you how to pay off your home, your mortgage in 7 to 10 years." What we did is we paid off all of our debt in 2 homes under 9. And now, we're doing pretty good. Tenants happy. We might try to make a little bit more money by doing something called a lease option. I don't know, get an extra 10 grand and still get the rent. And hopefully, if you want to keep the property, you just hope that the tenant doesn't exercise the option, right? So things like that. But here, yes, we have 2 free and clear houses. 2 free and clear houses. That's right. After paying off my Mercedes. Okay. So that's it for today, folks. If you want to let me know that you made it to the end of this video for the secret code or comment for the YouTube comments, just type in below, "I paid off my Mercedes Benz in 2 months," right? That's the secret code. Okay. I paid off my Mercedes Benz in 2 months. All right. All right. Well, have a great day, everybody. It's Craylanta Mentorship, and I'll be off playing Zelda, The Legend of Zelda Ocarina of Time. I've defeated all the dungeons except for the final one, which is Ganondorf. Okay. Have a great day, and I'll see you on the next video.